Chinese manufacturing rises in March. Asian stocks finished mixed, and as the market heads for the second quarter, U.S. stock futures point to a mixed open. I'm Chao Deng, and the morning call starts right now.
Good morning. I'm Scott Rudler, Chief Strategic Officer at T3Live.com.
And I'm Chao Deng with The Street. Together we bring you the morning call. Scott, what an amazing first quarter. The S&P ran up 12%. It was the best first quarter in a decade. What are we looking for as we move into the second quarter? You say that your foot is no longer on the accelerator.
Yes, I'm no longer pushing the gas, trying to maneuver 10, 12, 14 positions as of now. What I want to do is I want to put my hand on the stick, my foot on the clutch, and be a bit more flexible. Because each quarter is always different, composure is always different. I'm not saying game over, but I'm saying, you know what, we're not going to have the same type of returns. And a lot of people are all excited, like that was the best quarter ever. You know what, get excited if you participated. Get excited if you had the right approach to the market, because now that's in the books, that's behind us. Either you booked it and now you're trying to be flexible, or you missed out and you're trying to approach the second quarter, which you shouldn't think you're going to have the same type of speed, composure, or sector rotation with the leadership that we saw in the first. So that's what I'm willing to take a look at and take a step back, because I want the market to come to me. I'm not going to go chasing it.
Let's talk about what we're going to be looking at for the second quarter. There's earnings, there's China, there's Europe still. Overnight or over the weekend, we got Chinese manufacturing data showing that manufacturing activity rose in the month of March. But of course, we're still concerned about a China slowdown. It's like, you know, the everlasting question for us.
But those are the buzzwords, and traders look for buzzwords to see how the market reacts to them. We're still focusing on China, whether or not we get a hard or soft landing. Last night's numbers, I think people are saying we're a bit mixed, so not that big of a deal. I know last night on Twitter, all around, everyone's like, oh, blowout numbers, we're up 6 handles, then you come in today, we're flat. So don't get excited the night before, things change. And then you talk about Europe, you talk about, you know, is Greece really behind us? What does that mean now for Spain, for Italy? They have elections coming up, so I think we're going to see some new riots in the streets. So we need to see how the market takes that in the second quarter. Then really, my focus will be earnings. How do stocks react during earnings and during pre-announcement season?
Right. So earnings season, I guess, officially begins next week with Alcoa kicking off on Tuesday. This week, as you mentioned, we could get some negative pre-announcements. So what's the S&P going to look like this week as, you know, we keep all of that in mind here?
Well, first thing is if pre-announcements do come out, you want to see if they open lower and they get absorbed, or if the stock opens lower and then it continues in that direction. Then you know it's not priced in. As far as the S&P, if you look at the trends here, we're in the same exact trend we've had since October. Here is the low from October 4th. Here is that macro trend that we haven't even tested during the course of this entire rally. Here is the more intermediate trend that started on this December 20th gap and go. Here is the first time we really tested it when we broke it below the 10 and the 20-day moving average to then regroup and continue higher. Then last week, you saw a little bit of faulty action. We gave back the 10-day. We held the 20-day, but people don't know whether or not we had that little bounce on Friday for the weekend headline dressing, or, you know, are we going to just continue and take out the highs here? So for me, I'm very light. I'm going to see the next few days. You typically get new monthly inflows. You also get now a new quarter worth of inflow. So if we see lethargic, you know, downside action with new money, that's going to tell me we might get a bit more downside versus just taking out those highs very quickly.
And talking about perhaps some downside, technology, which was one of the strongest sectors in the first quarter, might take some sort of a rest as we go into the second quarter. Apple, for example, was weak on Friday. What are we looking at in terms of tech and Apple?
Well, tech has held the 10-day. Like you just saw the spiders, it tested the 20-day. If you look here at the Qs, you will see relative strength here. But we need to see if that continues into quarter two. We are hugging this 10-day moving average. So if all of a sudden Apple gets weak and we see more weakness, we go below 67.20, there's no reason why we won't test this lower pivot. Might not look like much, but for a momentum trader, this could hurt if you're too overly long. So I would watch the short-term level here. If this were to break, then look at this area, and all of a sudden, you know, the 20-day moving average is all the way down here. That's kind of nutty, considering you know, typically the strongest stocks sometimes test this area. So I would watch this area and then this one, and we'll talk about Apple later, but I'll show you real quickly. With Apple gave back its 10-day moving average for the first time in a while, and it closed below. We're opening up $1 or so with the news that the iPad's not really overheating. But for traders that made money in this weakness, a lot of us did on Friday, we're going to look at on Friday's low. That's 597.94. If it shows relative weakness today and goes below this pivot, you could short it for a cute short, and then you have this 595. But if we get a close below this intermediate range, we probably see a retest of this support in the 20-day coming into earnings, and that I think will be very, very viable, but that's a little bit closer to 580, so you need to know your time frame.
Now, similarly, financial stocks have been strong last quarter, with JP Morgan leading the way. Your eyes on Bank of America, so let's pull up both financials and Bank of America and see where the levels are there.
There you go. A lot of people obviously like to look at JP Morgan like I do intraday to see what the composure is, but psychologically people have liked the fact that Bank of America went from 6 to almost 10, so they want to see if that could hold higher, including me. So first let's look at the XLF. You will see, chart is still intact. This was that last breakout. This was above this 1492. Went as high. The high here was actually 1598. Since then, it's got a nice box pattern, nice little sideways consolidation. Need to see if that continues. Right now we're in the middle of the range, so it's hard to gauge. If we start breaking below this level, we're already near the 20-day, and the 20-day here is 1547. See if this area holds. Last time we went sideways, the lower end of the range held before making new highs. So the question is, if you sold into some of this strength, maybe buy a little bit on the lower end, but if we start to break through 1548, you're going to see a bigger correction here, so be careful. And if you look real quickly at Bank of America, you'll see last time we really spoke about it was right in here. This was your tier 1 long. Above 815 was the breakout. That was your time to get to tier 2 or 3. If you sold into strength, that's nice. And now you have a nice sideways consolidation. So short term, I would put this into 2 spots. Here is your middle ground. Okay, and here's your upper ground. If we can't get back above 970 and hovers sideways and the market, just say is positive and this shows relative weakness, then I could see us breaking this 935 for a move to at least to test this 20-day and then maybe even a little bit further. So I would say watch this support area as a micro support. If we start getting above the middle end of the range, then I think it's the trend as usual to the upside.
And now going through some of the other important sectors to watch here, retail broke out to new highs last week, but you're looking for some sort of a rest this week, right?
It's kind of the same picture. Retail also with tech has been very strong. But some of these stocks have had such enormous runs. If you look here at the RTHs, nothing to quite get worried about yet. But you did see a 3-day pullback to the 10-day. On Friday, it actually has a red bar where a lot of things turn green. So you need to see if that continues. You have a trend that's been strong, that's definitely accelerated. So I would say for short-term guys, if we start breaking below Friday's low of 4183, you might get a nice cute short to test bigger support, and bigger support right here is around 4132. I would look at stocks like Lulu. It's been a leader. But you had your wide range earnings bar, and then it came back, tested support. See if it needs time. Under Armour has been a rock star also, but look how sloppy it started to get in this upper end of the range. So I would say just be a little bit careful with retail because it's come so far, and you never know whether or not the money's going to rotate out of there and go to some other sectors for Q2.
Is the same story true with home builders, because that's also been flagging a bit at its highs? Yeah,
this is something to watch. And we saw some mixed signals from the home builders. I think we saw a great quarter from Lennar, but you saw some housing information a little bit weaker. So if we look here at the chart of the XHB, you will see that it's here was that last consolidation, and it wound up breaking above this 20.25 to new highs, and now it's putting in another type box pattern. This looks a little bit different than just say the Bank of America where it's hovering in the upper end. Okay, but look at this red bar on Friday. That shows me, could be a little bit weaker. So it starts getting below this upper area. Here's your support. You have the moving average at 2107. So as long as it stays in this box, I think that it's still showing leadership. But if it starts to correct, here's your, your line in the sand that I think macro investors would be looking to buy.
Now, how about healthcare? And that's been a really interesting sector, especially last week with all this talk about Obamacare. And supposedly the Supreme Court should come to some sort of a decision quite soon on Obamacare. I'm hearing that analysts don't really make much of, what exactly they're going to come out with in terms of the outcome, because, it seems as if healthcare stocks are going to do well either way.
They just came after them. So the analysts are on their heels, and the market just said, I'm buying them. And I fully miss this. I don't trade the healthcare stocks well. There's only so much real estate on my screen. But if you look at the chart of this sector here, like I just showed you, retail and the Qs that were resting, this closed at highs. So this is where some money went. You had a nice long consolidation. Here's when it broke above, retested. And now it's interesting to the upside. I'm not going to chase it, but if you look at stocks like Aetna, wow, look at that 2-day move. Look at Humana, HUM. pretty impressive. This actually I would put on the radar, the radar, as long as it goes sideways, maybe gets above 94. But, the more I scroll through some of these, the more I have to say, you know what, Red Dog, switch a few gears here and start looking at some of these names also, because if the volume stays there and the retracements are shallow, you'll have some good trades there, while some of the names we know could get downside action or just, sideways corrections.
Now, in terms of commodities, how are you switching your gears there, especially gold, where we're seeing an interesting reverse head and shoulders pattern, right?
This is the start of an inverted head and shoulders pattern. What this is you have a long-term vision. You want to buy in the hole. And we just had a nice correction in gold, in silver, and there's still so many people pounding the pavement. Gold 2,000, gold 2,500. Now, I've had a thesis on gold for the last 4 years to the upside. Right now, I'm in a little bit more of a wait and see, but this pattern, is intriguing to me. So I actually went long a little silver last week for the first time. But if you look here at the GLD, which is very similar to silver, which I'll show you later, here's a pattern that this looks very similar to the OAHs that I pointed out in December and a few others. So here's the left shoulder, here's the head, here's the right shoulder. If you take a closer look here, you will see that you had a reversal back in mid-March, and then you had a higher low right here. So let's take an even closer look just at the right shoulder. So now I am long, just say in the silver chart versus low. If you want to be long gold and you didn't get involved in this whole correction because it was very fierce to the downside, especially on this Fed day, you buy a little GLD right around here, around 162. You put your stop at 158. As long as we hold this area, the right shoulder, it stays intact. So tier 1, it starts getting above this 164.89. That's when we start getting momentum to the upside. That's your tier 2. Then the next real resistance is 172. But right now, this is just a thesis. Just a thesis that the market has to confirm. That's why you stay in tier 1 for now. And as the market confirms it, you start getting heavier.
Great. We're going to take a quick commercial break, and when we come back, we'll hear about Scott's take on the high beta tech names for this week.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the morning call. Scott, let's talk about Apple. This has had a monstrous run the first quarter. So are we looking at it to finally take a rest here?
Well, as a short-term trader, there's always big moves there. And a lot of guys saw the relative weakness on Friday, and it was a nice short below the 10-day. You look here at the chart, for the first time in a while, Apple actually closed below the 10-day. If you look at this entire run, you really never closed below the 10-day, except for right here, and then we held the 20-day. So if that's the case, this one is actually even a little bit more decisive below the 10-day. So what traders are looking at today, the stock's up $1 or so. If it starts to go sideways and it can't rally and stays below this 10-day, I think they're going to be looking for a cute short below the low here, which was, got to give it to you right there, 597.94 through that low. And if it stays below, I think you have a nice meaty short. First cover would be around 584, which is a 20-day. And at some point, I think this area will be buyable, that we test it before earnings. So, pick and choose your battles here as an investor. Stay long as a trader. I think they're going to be looking for a cute short if we can get below Friday's low of that 597.
Got it. What's your strategy with Amazon? This stock has been flagging above its 200-day moving average.
Well, Amazon last week or a week and a half ago, we talked about the macro pivot on the downside, or not at the micro pivot. Okay, and that level was 186, 187, and that was a trigger to buy. We weren't sure which way it was going to break. It broke to the upside. And if you look here at the chart, you will see that this was the area we were watching. This was that coiling pivot. You had a nice long to the upside, held, went sideways, flagged, and then you had a nice move into resistance. And this is when we were talking on the Twitter feed to get out of some. I actually caught a little cute short the day after and then got away from it. And now you have this flag type pattern. It was downgraded today, downgraded by Merrill Lynch. So if it can get below and stay below this low here of about 200, I do think that you're going to get a nice test to cover right into this like 195 area. And I think if this has any kind of constructive type of nature, it's not going to get below this area, which is around 190 to 192. But if you're short, because look at Friday's weakness. Friday closing the lows, some momentum guys would have said, you know what, I'm taking this out short. And obviously right now, if they did so, it's down about $3 or so. So actually watch this cube, moving average, and then you have a bigger level underneath.
Got it. Now, Baidu is becoming quite the .com darling here. This stock is holding above $140 a share, and the average price target from analysts is $188. dollars a share. It's been driven up by reports that Apple intends to include Baidu as a search option for Chinese subscribers. So it looks like we're going to see an up pattern here. What's your strategy if that would happen?
Again, like a week and a half ago when all these high beta names looked ready for their pivot buys, the pivot buy here was 140. And then from 140, it had a beeline move to the resistance above 155. And then you saw a short-term little reversal there. So if you look here at the chart, you will see here is when it crossed this downtrend. We talked about it many times. It tried a few times in here and got us good, but then finally went above, and then stayed above, and then you had to move to 155. And then look at this nice little doji into resistance. That was the outlined area resistance. So, that was your point to sell it, take some off and trail some, and then once it broke below that low there of 148.50, I got stopped out of, or someone should have gotten stopped out of their trailer. So we pulled back. I would say, watch this area as long as it stays above this 145. I do think that it can continue. So short-term traders, as a trade, watch this 144.16. As long as that holds, I think you could buy. If you sold 155, why not test 145 as an area? But below this, then you have 140. And if this is any good, this will not get and stay below this prior breakout. It should hold it. Sometimes you go and you retest, but I think that's even too deep of a pull-in for short-term momentum guys. They don't want to see it pulling that much. 144 is their line in the sand.
Okay. Now, Netflix, you've made some nice trades on this one since the break above $75 a share. There's been some news that Netflix is talking to cable companies to offer basically content alongside other paid TV channels. I'm wondering, are you listening to the news around Netflix, or are you just looking at the technicals?
News come out every day, chatter comes out every day, and it's really important on how it reacts. Sometimes it goes up, there's no volume, it just falls down. For me, I'm in like wait and see on Netflix. It's not that compelling, it's on my C list. About a week or so ago, I talked about it breaking the descending channel around 111 for a nice move, and it went further than I thought. I actually sold it for a few dollars, and it went a lot higher. If you look here at the chart, you'll see that here is the last time I got excited about it. First, obviously, in the beginning of the year, before that huge move, and then you had the outside reversal. But then recently, you had this descending channel here, right? This descending channel that was very exciting, that broke to the upside. This was right around 111, and then retested, and you had to move to about 123. And now it's pulled back. It's in the mix of all these moving averages. I would say for short-term traders like myself, it's not really that compelling, but I guess if you wanted to draw an inside range here, okay, so I'll get my little line so you can see it. Here's your inside range. This is your two little points to trade against. If it starts getting below the low here of 113, I think it just falls by to the wayside. But if it could finally get back on its horse and get above this 118.60 with some of that news maybe from the cable guys, it gets going. But for now, here was your trade, here was your sell, and now it's kind of noisy, so I'm probably not even going to look at it the next day or so.
Okay, so not too compelling there. But I know Google, I know you're excited about that one because that is Scott's 2012 stock pick. This stock did not outperform in the first quarter, but it has regained composure, and it did, I guess, absorb or recover nicely from its earnings miss. So let's take a look at what happened on Friday with this stock and what kind of hints you're drawing from that.
This stock is, I love to hate it. It's a high price stock, so it's very slippery, and a lot of people get emotional about Google. And it was my stock of 2011, and still is, and it hasn't performed the way I would want it to. But if you stayed the course, you had a few different strategies to watch. You have to know whether you're an investor or a trader. And for investors that held through earnings, if you look real quickly here, you will see that here the earnings report came out, and if you held through, that means you're a long-term trader. You had to hold your nose and go underwater. But we talked about buying into this 560 area, which was the prior support. If you did so, you bought, you brought your average cost down, great. Because if it went from here, you probably didn't own enough. And then this was when a trader got involved. For this 591 through the gap, you got paid. Then here's your nice sideways consolidation. Started, holding above this 620 right around here. It broke above this prior pivot, which was what, 625. And then you had a nice move. And then on Friday, it got a little bit corrective type, because look at the size of the move back to resistance. So I would say if you sold into strength, I'd be looking to be a buyer back at this retest. So 627-ish, or maybe say 625. This would be the area that if you did get short here, because some people got short as it broke this small little uptrend and closed on the lows. So the pivot here right now is 541. Below 541, I think you take your trades, and if you're not in it, and I'm not in it right now, so I'm going to be looking, if you want to follow me on the virtual trade floor, 625 to 627 would be a compelling area to buy. And then based on your time horizon with earnings plays, we'll have some type of option strategy for those not willing to hold the stock.
Great. Let's jump into our quick hit stock section. First up, Caesar Entertainment. It had a nice move on Friday, up 6.5%. Are you still a buy short term on this stock?
I am out of it. I sold some strength. I sold it around 1470 or so, even before the last move. This has been on my virtual trade for long. Even when I got somewhat flat last Tuesday, I think there's big things ahead of Caesar, but obviously by what you could see here, these are my pivots. This was the first time it broke out. Here's your flag. This was your buy above 1330, and now it's into my target area. So if it can go sideways and hang out here, just say above 1375, build a new pattern, I think it'll be buyable through the high, but it might need a little bit of time. I think long-term investors stay with this one. This one could be a double in the next year to 2 years, but for me as a short-term trader, it just saw about 35% in a short period of time, so take your trade as it comes.
Great. What about Las Vegas Sands? What do you do there depending on if you're an investor or a trader on that one?
This one also, long-term, be an investor as a trader. It's been a little choppier lately. There was Macau numbers out today. I think they were in line, not above. Usually they have to be above for it to continue. If you look real quickly on LVS, here's your line in the sand short-term. I think as long as it stays above this 56 area, at some point we take out the highs here about 59.60. So here's this little box formation, but it's a little choppier. I'd be in a little light.
Great. And Aetna, we did touch upon the healthcare stocks, had a great run up. So what's happening with that one?
Big 2-day move. I would just put it on the side, let it consolidate, and then we'll talk about this later this week.
How about Zynga? Do you see an opportunity there now?
Zynga is one of the few stocks I stayed with. I heard the deal was really tight. No hedge funds got it, all mutual funds. So you could be long versus that 12 and a quarter, 12 area. It's only at 13, so it's 75-cent risk for what I think could be a $17 to $20 number at some point before Facebook.
And lastly, Schlumberger, it's underperformed in the first quarter. Do you expect to see a bounce there?
I tried to be long it a few times. I'm avoiding it. It'd be nice to see if some money comes into these refiners. If you take a quick look at this chart, you will see it is below, a lot of the moving averages. It broke down. You have a small little pivot here. Small little pivot. So I know there are a lot of Schlumberger fans out there, and a lot of people would love to be long. The only way this thing starts to get going if it starts breaking above this 70.46, but then, it would be a short-term trade back to this area. So for this point, it looks weaker than stronger.
Right. And now just to finish today, this morning at 10 a.m., we have two pieces of economic data coming out from the U.S. We have construction spending data and then also manufacturing data from the ISM. So Scott, do you want to just put in a quick tip for morning traders how we're looking at for the 10 a.m.?
I would say it looks like the market's opening flat-ish to down. What traders and what everyone's holding their hat on or trying to brace is a stronger U.S. recovery. So last week on Thursday, the claims were a little bit lower. They weren't better than expected. So we want to keep seeing, positive or above average reports. So if all of a sudden, if these are viewed as a negative, then that could dampen the whole U.S. recovery thesis alongside with all the other headwinds. So I'd like to see positive news. And if we do get positive news and they sell it, then that really tells you we might be in a little bit more of a corrective mode. So I think the big number is going to be Friday. So it'll be interesting to see how people go into it on Thursday based on the fact that most equity markets are closed and only the futures markets open on Friday because it's Good Friday. So there's a lot of trading between now and then.
Great. So we're heading into a new quarter in a shortened trading week, new opportunities, of course. So happy trading.
Yes.